Hi, thanks for tuning in. This is the ASX and Sectors weekly chart analysis for the week ending 20th of March 2026. The first chart is the S&P ASX 200 index. This is the XJO, the parent index of the Australian Stock Exchange. You can see that markets closed lower this week, albeit only slightly below the previous bar's low. It's trying to hold on there, which is different than some of the market, which has really broken down quite badly this week. You can see there's the previous bar's low, and it's threatening to break down below it. We've broken down from here by the looks. This bar last week closed almost at mid-bar, and it did suggest that some buying support had come in. But despite that buying support, the market still closed lower this week. Volume was quite high this week, but it was affected by options and futures expiry, and it was the quarterly expiry, so that's always a little higher than the regular monthly expiry day. So you can take that with a little grain of salt there to some degree. If we move on and look at some of the other charts, you'll see that this chart is actually holding on quite well. This is the mid-cap sector. And the mid-cap sector broke down in a similar fashion to the parent index up here, but continued lower this week. Volume was high in this market as well, as it was across most of the market, at least to some degree. But this market closed well below the previous bar's low, and this was the market continuing to sell off here, whereas the parent index is trying to hold on, at least to some degree, mostly due to the financials and energy to a large degree. But this market sold off, and you'll note as we look across many of the charts today that the market's not really respecting previous important levels. The market's selling off almost randomly to some extent, and that often reflects a high degree of retail involvement. If we look at the small ordinaries, it's a similar case. Market has broken down from up here, as the overall market did, but it's closed well below the previous bar's low this week, confirming the weakness and seeing ongoing supply drawn out. If we look back at some of those charts, here's the mid-caps. You can see that it's not respecting the previous lows in the background very well at all. The market's selling off almost randomly. There was a period of bullish absorption through here, which may offer some support. You've got the more important level down here, and that may be where the market is heading to overall. It's really hanging there at no important level, and that generally means the market has overshot its previous level or it's got further to go. So watch these carefully. This is the financial sector, which we saw a shakeout kind of bar last week. That's this bar here. Here's the previous lows. The market attempted to move higher this week, but with the selling in the market, it wasn't able to maintain a higher price, but it has held on remarkably well on pretty high volume, although that would have been affected by options and futures expiry. But prices held on at this level, which is a good job. The market has absorbed the supply that was drawn out, and it's held on at that level. And this market has held up, to a large degree, the parent index, with the big four banks in particular not being reflected in the mid-caps or the small ordinaries. So this market has held on really, really well. This is the metals and mining subsector. You can see prices broken down up here. It's trying to hold on at this level here. The more important level is probably through there. So if the market can't hold on here, it's probably going to come down to this sort of level in here. But it has closed at a reasonably good level in through here, where there was a period of consolidation through there like that. If that can't hold, I expect the market will be back here. And gold, to some degree, was selling off even harder at this point. After a pretty good run, it has to come back and consolidate to some degree. That's the support in the background. That's the previous support. That's exactly where the market's closed this week. So I expect there's going to be an attempt to support the market at this level. It will depend to a large degree on the actual gold price. If that continues to sell off, the next level's through here. It's only a minor level though. I do expect the market will probably make a pretty serious attempt to hold on kind of in here like that, especially if the gold price actually finds some support. The really strong level in this market is back here with this congestion in the background. But that's a long way away at the moment. It would take a big sell-off in gold to get it back there. This is the ASX energy sector, and it's been benefiting from the issues around the world at the moment, with the price of crude really accelerating higher, also gas and coal. You can see there was a little test for supply this week, and then price really accelerated higher, very high volume. Price closed right up near the week's high. That bar is standing pretty tall and proud there. You can see that spreads increased as the market's accelerating higher. At some point, supply will be drawn out, but at this point, there's no obvious signs of supply being drawn out. There's certainly not enough that's going to affect this market in the near term. This is the healthcare sector, quite the opposite to the energy sector. This market's made a series of attempts to consolidate, and it's failed each time so far. A good example why you don't jump in too early, even if you've seen what appears to be some form of consolidation, because this market's tried a number of times now to consolidate sideways, and it's failed each time so far, and it's really failing to get any traction here at the moment, with price closing below the previous bar's low again this week. So this is just weakness continuing to emerge. Spread did reduce somewhat this week and volume increased. So there may have been a small amount of buying support entering the market, but we'll have to wait and see for that, because you wouldn't want to jump into this market too soon. This is the industrial sector. The industrials have broken down more recently. The thrust lower has perhaps shortened a little, but the market's closed well below the previous bar's low on an increase in volume. This is another market that's really struggling to hold up in the face of supply being drawn out. They really just have to go with the supply for now. The market's not going to be able to comfortably absorb the supply at this point in time. And why would it? It would be better off, if you're going to buy, waiting for the market to go through its paces, possibly come down to this sort of level and buy it down there. This is the consumer staples sector, and this is often considered a defensive sector. So when the market's selling off, this market gets a bid, and it has done so more recently, with a big push higher a month ago up towards the highs of the range. Some supply was drawn out on this bar and price came back, still trading inside this widespread up bar's range to consolidate, and that consolidation appears to be successful with an up bar in response this week. The market has remained inside the previous bar's range. It would really need to see a push above that level to be more positive. But at this stage, it does look like the market has consolidated 2 weeks ago, and you've seen the response to that this week, which was relatively positive. It's not a complete reversal at this point. It's an incomplete reversal, and price would need to move above this level. You need to break clearly above this level to suggest that this reversal is going to be valid. This is the consumer discretionary sector, and it continues to sell off quite badly. The market was attempting to consolidate through here, and it was doing a pretty good job. It did try to hold on for some time here before it really did break down here, and really it's just continued lower. The last 2 weeks have seen the thrust lower shorten to some degree, but it's really not enough to say that this market is going to really catch a bid and recover. The market's closed well below these levels in the background now, where support came in previously, and it's below the last gasp lows as well now. So this market's not respecting its levels at all. It's just selling off. And that's often a reflection of the retail traders in the market. They're just selling off without really taking any note of the important levels in the chart. This is the ASX property sector. It also continues to sell off. Here's the last attempt to consolidate and support the market. This is the breakdown bar. Prices accelerated lower over the previous 2 weeks. It did close below the previous bar's low again this week, but the thrust lower is considerably shorter. Volume was increased and above average, so there may have been some buying support emerge in this market as well. It wasn't enough to stem the supply completely, but there may have been just a little attempt to support the market in here, possibly because many of these markets are probably getting towards oversold here, just depending on what goes on around the world and in the Middle East in particular, and that just leaves the market quite tentative in its support. But there was perhaps some minor attempt to support this market this week, and you've seen that on a number of charts if you look back through. If we go back to the parent index, it was aided quite a lot by the financials and energy, which helped to hold it up to some degree, and price really only closed just slightly below the previous bar's low, and it's really trying to hold on as best it can in the face of supply continuing to be drawn out. But until something more stable happens around the world, these markets are going to be vulnerable, and the trading is going to continue to be tentative at best. These markets are reactive to what's going on. They're not being proactive, and they're not showing any intent at this point. So really best to watch how the markets are trading, and we'll keep watching the chart, and eventually we will see some buying support emerge. That's not just speculative support, it's true buying support, and that'll be our indication that the professionals across the market are starting to rebuild positions. Okay, thanks for your time. Should be back again next week. Thank you. See ya.